Hi, I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Many of you have written emails, called, also written on the blog and on Facebook that you'd like me to talk a little bit about the M2 Telecommunications takeover of the internet service provider and insurance provider Dodo. Dodo provides services to about 400,000 mum and dad or retail customers. This is an interesting acquisition because typically you find in Australia that most acquisitions don't add value, they detract value. But it appears that on the surface, this particular transaction is going to add value to M2 Telecommunications. What I'd like to do is take you through the numbers by looking at the old MTU, or the old M2 Telecommunications, and the new M2 Telecommunications with Dodo included. So, prior to the acquisition, M2 Telecommunications had 158 million shares. We think that's going to rise to about 177 million shares. Given the acquisition, it's the nature of the acquisition, which primarily is an acquisition of goodwill, and you've got to keep that in mind in terms of the riskiness of the balance sheet, equity will rise from about $203 million to about $287 million. That means the equity per share will go up from $1.28 to about $1.62. Now, in our valuation formula for calculating the intrinsic value of companies, equity is a big component, or equity per share is a big component. So the increase in equity per share is a positive on the valuation or the intrinsic value product from the formula. Okay, keep that in mind. What's more important though is the impact of the acquisition on the return on equity. And what's interesting is that the revenue will go up from $630 million to about $1.05 billion. EBITDA will rise from $113 million to about $165 million. And we estimate, remember the company doesn't report this, but we estimate that the net profit after tax, which is vital in the calculation of return on equity, will rise from about $57 million to about $82.5 million. If we compare that increase in profit to the increase in equity, we find the return on equity stays about the same. It's going to stay at roughly 28%. What does that mean? It means that the intrinsic value of the business has risen. You can do your own calculations to estimate by how much the intrinsic value has risen, and keep in mind two things. One, the intrinsic value, the intangibles on the balance sheet have gone up, and so has the debt. So that's my 3-minute insight into M2 Telecommunications takeover of Dodo. Equity per share goes up, return on equity stays the same, therefore intrinsic value should rise. Look forward to seeing you next week, and keep following us on Facebook and Twitter.